All right, guys, we are on record, so this webinar is being recorded. Hello and welcome to our webinar, IRA Strategies, an advanced guide to retirement planning and private banking. This webinar is part of Northwest's Financial Wellness Series. My name is Denise Kitchen, and I'm one of the relationship managers of the Retail Sales and Service Department. Our department manages the partnerships the credit union has with organizations so that they can offer credit union membership as part of the benefits package to their employees, members, and volunteers. First off, again, thank you so much for your interest in our webinar today. Secondly, I'd like to go over some housekeeping items. Everyone is muted due to the number of participants, and we ask that you hold your questions until the end of the presentation and then ask them via the chat feature when we get to our Q&A session. You will find the chat feature at the bottom of your screen. You can also direct your questions later on. The presenters' email addresses will be displayed. You can ask them more detailed questions via email as well. Please use your reactions button, which should be near your chat button on the bottom, just to kind of let us know how we're doing during the presentation. We like seeing that. Also, we will be raffling off a $25 Visa gift card at the end of our Q&A session. So please, please, please make sure you stay tuned until the very end. Also, just as a reminder, I will be sending the link with the recording of today's webinar to all registrants so that you can have it and you can view it at your own leisure again. Without further ado, I'd like to introduce Joanna Wilbur, our team lead of IRA Trust and Estate, and Chris Greenhill, who is our private relationship manager. Joanna, you are starting us off today, so please go ahead and let me advance the slide for you if I can. There we go. No, wait. Excellent. Here we go.
Hi, everyone, and thank you for joining me today. Good afternoon. Some of the things that I wanted to talk about, just some highlights of some of the changes that have occurred with the Secure Act, and we may also talk about some things that might be coming around the bend, since we also have Secure Act 2 that's been passed by the House, and now it's being worked on in the Senate. But some of the more important changes are the major things for the traditional IRA and 401k, TSP, and 403b requirement of distribution age. That has changed. So it used to be 70.5, it was 70.5 for almost 40 years. And then a couple of years ago, 2 years ago, that changed to age 72. Well, why did it change? One of the reasons it changed is because people are living longer and they needed more time to accumulate more assets. The other thing that occurred is that for traditional IRAs, it used to be that once you turn age 70.5, once you had that RMD age met, and now would be age 72, you could no longer contribute to a traditional IRA, even if you were still working. So the only way, of course, that you can contribute to make regular contributions into an IRA or any retirement plan is if you have earned income, meaning that you have a job. But people are working longer. They know they have to work longer. They know they have to accumulate more assets. So Congress finally made some changes regarding that due to the longer lifespan that people have and the fact that now you just need more money in retirement. But the biggest change probably was the fact that now we have something, the inherited IRA, where people, when you gave your money to your grandchildren or to your sister or to your brother or to your niece, your nephew, or whomever, they could take that money out over their life expectancy. That was changed, which is a huge change. And so now what we have now is that if you're not a designated or eligible beneficiary, you must empty out that IRA within 10 years after that IRA owner's death. So that is a huge change. And that means that you really have to think about who you're naming now as far as your beneficiaries go. If you're not going to name, your spouse, and you want to name other people, you really need to think about what the consequences for that person might be. So we can go on to the next slide now. So based on the recent changes to the law, let's talk about some of the moves that you might make, right? So one big thing is, if I can work now, if I don't have to take my RMD until age 72, that means that now I have a longer period of time to accumulate assets. if I can now make contributions into a traditional IRA, as long as I'm working, you can offset some of the adverse consequences, maybe of having to take that required minimum distribution till age 72. My husband has every intention of working until the day that he dies, as is my father. He's 88. He is a college professor. He still contributes to an IRA. Once the law's changed, he still makes his contributions into the IRA, even though he still has to take money out. He likes getting that backdoor tax deduction. For some people, that can happen depending upon what it is and how much money you earn. The other thing is that being able to contribute to an IRA through age 72, not having to take that RMD, I should say, means that you can also strategize as far as taking your Social Security. So remember, if you can wait till age 70 to take Social Security, you get a lot more money over the time that you have going on as far as taking that Social Security money out. Remember, if you take it out at age 62, you get a lot less. If you can wait till age 70, a lot better. So that means that you have now even more money to last through retirement. Then the next big thing is that beneficiary designation that you have for the 10-year limit. The way this works is if you make your spouse your beneficiary, they can take that money out over their life expectancy. They can take that money out over 10 years, whichever it is they want to do, they can make that decision. However, if you have, say you give it to your grandchildren, say you give it to your a friend of yours, that sort of thing, that person has got to take that money out within 10 years. And that means that you can have severe tax consequences for that. So let's say you have $300,000 in an IRA or 401k plan. You give that money to your children, okay? What happens? They have to empty out that money within 10 years. So your kids need to do that. So let's say you have 3 kids, you give them each $100,000 because you're giving up the money 3 different ways equally. You split it equally amongst them. They now have to empty out that IRA. Now they're in their earning years. That can put them into a very large tax bracket, and they will have to pay the taxes for that. So there are some strategies for that we'll talk about a little bit later. But meanwhile, we'll go on to the next slide. So let's talk about the increased age 72. What does that get you? So that increased age to 72 means that you also now get to take out less money. At age 70 and a half, you are taking out 24.7, okay? So now it is at age 72, 27.4. That means that your RMD is actually less, which means that now you get to keep more money in your IRA for a longer period of time. So that's a huge benefit. So that's like an 18%, increase as far as being able to keep that money in your IRA. Let's go on to the next slide. So what are some other strategies, like I said, that we'll talk about? So now that you have that 10-year clock ticking from the date of death of the IRA owner, what could you do? Maybe you might make a trust your beneficiary. Maybe you'll use some of that IRA money to buy an insurance policy, because when the beneficiaries get their money from an insurance policy, that's not taxable. You might do a Roth conversion, convert some of your 401k money or your 403b, TSP, or traditional IRA or SEP money into a Roth IRA. Because even though that 10-year clock still ticks on that Roth IRA, when you take money out of a Roth IRA as a qualified distribution, no taxes are paid. Changing the types of beneficiaries. Don't make it, your children. Maybe make it the trust. Maybe make it a charitable organization. If you make it a minor child, okay, you have to be aware there's one little bit of a benefit for that is that a minor child, they're under the age of 18, they do not have to start taking any distributions out of that IRA until they hit their 18th birthday. But after that 18th birthday, once they reach the age of majority, then they do have to empty out that IRA within that 10-year span from the date that they attain the age of majority. So these are some strategies that you might want to think about. And also, if you have any other questions, we are here to help you regarding that. Next slide, please. So what's on the horizon? As I was talking about the fact that the House has passed Secure Act 2, and that is going to be a big change, especially if you have a 401k plan or 403b, TSP, that sort of thing. The main thing is that there's going to be automatic enrollments into the 401k plan with your employer. They're also going to index the catch-up provision that we have, and they're really going to start indexing the contribution limit, which is going to be big. Because right now, the catch-up contributions you make for a traditional IRA or Roth IRA, if you're over age 50, is only $1,000. Let's think about it like this. Inflation right now is 8.5%. We could all use a bump as far as that goes. Okay, so that's a big deal. And the other big deal they're going to do is they are going to start raising the RMD age. What that means is they're looking at age 73, 74, 75, and they're going to max it out at age 75. So that means that what they're going to try and do, I think by year 2025 or 2027, what they're trying to do is get that up to age 75. And that's when you have to do your required minimum distributions. They're also thinking about doing means testing. If you have over a certain dollar figure, you might not be able to do Roth conversions. That dollar figure right now is pretty high. From where it came from the House, it's $400,000. If you have earned income of over $400,000 or taxable income of $400,000 or more, you won't be able to do a Roth conversion, which now there is no income limit for doing that. The other thing they're thinking about doing is if you have a total of $100,000 or less in a retirement account, you will not be required to take an RMD. So these are just some things that are on the horizon, things they're talking about that will be tweaked at the end of the process, but they are actually trying to figure out if they can't get something done by the end of this tax year. So we'll just stay tuned. And of course, as soon as we find out what's going on, we will definitely let you know. Next slide. I think that's it for me. I'm going to switch it over to Chris Greenhill, and he's going to talk about our great private banking services that we have.
I appreciate everyone's time today to join us and learn about some of the more advanced conceptual ways to view retirement planning and the effects that the taxes can play a role in terms of what's actually going to be received by your beneficiaries. And also some of the changes that are taking place potentially here in the future. For those who are new to Northwest, I wanted to take a few minutes here to tell you a little bit about who we are and what we do. We've been serving our members and communities for 75 years now, actually 75 years this year. And we're headquartered right here in Herndon, Virginia, but we service members all over the United States. We're the third largest credit union in Virginia and still growing. We currently help over 250,000 members with a little over 500 passionate employees making it happen. Our goal is to be your lifetime financial partner. So there's various reasons why someone would choose to change their banking relationship or start one here with the credit union. But whatever that reason is, we want to be there for you today as well as the years to come. So I'm the private relationship manager here at Northwest. For those that are not familiar with private banking, I provide a concierge service to my members. They call me or email me with any questions they have. Just like we talked about today, we talk about how people have accumulated their retirement assets and now what do you do with it? So that's obviously an area of concern that I see on a regular basis here with our members. The private banking program is about taking the time to get to know you and your finances and help you reach whatever your goals are. The way I work with my members is by starting with a discovery meeting to understand where you are, where you want to go, and what challenges you may encounter. Then with that information, my team and I provide you sound recommendations to ensure that you're equipped with the knowledge and resources to get to your goals, either short-term or long-term. Once your plan is in place, I'll work with you to ensure you stay on course. And we know life is always changing dramatically, even at times, as we've seen over the last few years. And also things that normally could occur, like getting married or divorce, kids moving out or back in, changing jobs, sending kids to college, retirement, inheritances, and the list just goes on. Like most services here at Northwest, though, there is no cost to participate in private banking. But there is a qualification criteria of $250,000 you must have with us in order to participate as a private banking member. It's important to know that it's important to know not just what's going on in the market, but how what's going on ultimately affects you. How will those changes impact you? Really what I'm here to do is to help you best leverage what you have to get to where you want to be. If you'd like to know more, please reach out to me. I love the opportunity to work with you. You obviously, since you're here, find the value in financial education and preparing yourself for the future. We offer even more financial tools to our members and community outside of what we're talking about here today. Consumer debt right now is at record highs right now, coupled with the fact that rates are increasing here on the horizon. It's more important than ever to kind of know where you are as it pertains to your credit and how to manage it in the most effective way. With so many financially impacted over the last few years, I anticipate a lot of people will see a lot of benefit in looking for ways to improve their credit or recover from any financial hardships. Our financial partner, Coffee, offers financial support through education and one-on-one advice with financial coaches. Financial literacy is really a big part of who we are. So we take the time to educate our community and companies and organizations on topics just like we did today. We are a credit union and we're people serving people. So we don't just talk about supporting our community. We actually live those values out. So besides the testimony from our members, we receive recognition within the community as well, such as the 2022 Loudoun Chamber Community Leadership Award. And we won the Intergage Top Workplace for the third year in a row. Another way that we show our heart for the community is that we encourage volunteering by giving each employee 24 hours of volunteer time throughout the year to support. So we don't just support with our time, though. We also support monetarily. We've donating over $100,000 to support our community through various efforts. So Northwest is also the leading name sponsor in the Children's Science Center Museum. So if you haven't heard, you will see that in the coming years. It's a great project and we're very proud to be a part of that. So if you're not a member, this is a great opportunity to join us. There are many ways that you can become a member and take advantage of the services that we provide, while knowing that your membership comes back to you and your community through lower rates on loans or higher rates on deposits and just, state-of-the-art customer service. Here is the link that you to become a member, nwfcu.org/membership. You can become a member online or visiting one of our locations or contacting me. I promise you it won't take you long to set it up. For all of my visual learners out there, I said it would be easy. You're only 5 steps away here. So visiting NWFCU, click on membership, apply online, Then you'll select if you're new to Northwest or if you're expanding your relationship here with us. And number 5 is to select your eligibility to join. So there's 3 pathways to memberships here at Northwest. Either your company that you work for may be one of our select employer companies that you can participate as an employee. You can also join based on your relationship with existing members here at Northwest, or you can join by becoming a member of our community partners here as well. So if you have any questions, again, definitely reach out to us. We'll show you how to join us here at Northwest. This is my team here, and as it states here, we're here for you. So today, I know we talked about some of the IRA strategies and the things that people can do to kind of make sure that they're maximizing the benefits and growing those assets in the most efficient way. My team works directly with companies to bring banking outside of our walls, just like we're doing today, and make those services available to you. So just like we talk about retirement today, we actually cover a diverse range of financial topics, from purchasing a home, buying a car, managing debt, into life planning, and the list just continues. While we mostly are still doing virtual webinars, we hope to transition in the future to more in person as well. I appreciate you all's time. I'll turn this back over to Denise to wrap us up.
Awesome. Thank you guys so much, both Joanna and Chris. Thank you for being here. Now we're going to our Q&A portion of the program. So while you guys get your keyboards ready and your typing fingers warmed up, we did get some questions in beforehand that I will go ahead and pose to our presenters. So let me start with, how long does the beneficiary have to claim an inherited IRA, or to clean out, I guess?
They have 10 years. And like I was saying, it all depends if you're a minor child, if you are a husband and wife, spouse. And also there's another way that you can draw that out. And that is if you give your beneficiary designation to someone who is essentially the same age that you are, if they're not more than 10 years younger than you are, then you actually can take that money out over your life expectancy. So that means if your sister or brother is not more than 10 years younger than you are, then they also have the opportunity to get that done.
Excellent. Thank you so much, Jen. I appreciate it. And before I go into the questions that we received beforehand, let me address some that are coming in. How do you go about setting up a trust?
Well, you need to go to your lawyer and get that trust document done and produced. And then you can set up the trust with Northwest Federal. Now, we are a credit union. What that means is that we do not administer trusts. You can't name us as your trustee, just that you could not name us as your executor, okay? So I do know that Chris also works with members trust. He can speak more to that. So we are, the credit union can hold the money, but you would need to be, you would need to have another trustee be your the trustee for your trust. We hold the money here, and then we pay out the money according to the trustee's wishes.
Mm-hmm. Excellent.
Chris,
Next
can you
question.
talk about members trust a little bit?
Yeah, I mean, so to your point, Joanna, yeah, we have many members who have trusts, and as you stated, they go to their attorneys and have these drawn up. And we know that our members aren't lawyers themselves, so they come in with the document and say, "Hey, I need you to, I need you to have this retitled for me accordingly." So it's important. I work with both my members and oftentimes their attorney to ensure that the account is titled correctly and that we have everything set up so that everything that they've spent time and money setting up the trust, that actually it follows those directives. So yes, as Joanna stated, we do not administer the trust. So we're not going to be the ones, handling the trust, but we're holding the asset here. And a big part of what I do on an annual basis with my members is going through their accounts to ensure their accounts are titled correctly. Things change, and it may not always be on the top of your mind here to make sure you update an account to reflect that change. So I try to be proactive in reaching out to members and making sure that that's in place.
Excellent. And I think that kind of goes hand in hand with the next question. What estate planning help do you offer?
We cannot help you draw up your will. We cannot do that sort of thing. We can have a general conversation as to what it is you think you'd like to do, ideas about maybe structuring some of your accounts here at the credit union. But we can't actually tell you, hi, this is how your will, here's your trust account, here's your POAs. We cannot do those legal documents. You really need to talk to a lawyer about that. However, we can chat with you, and I've done this many, many times over the years. We can chat with you to let you know what kinds of questions to ask, what kinds of answers to look for, and also think about ways to, think about what it is you want to accomplish with your estate plan. And estate plan, really, you just don't want to talk about just your end of life situation. You also want to talk about, how do I set myself up financially for the different phases of my life, right? Because unless you get hit by a bus, the phases that we're talking about, we have everything's great, everything's awesome, everything's fabulous. Things start to get not so fabulous. Things start to get kind of rocky. Things are in bad shape. So you need to have different kinds of documents, different kinds of financial needs, different kinds of people who need to be in your life, either working with you or for you, as far as making sure that financially you are still on a good path, or that your spouse and children are also on a good path. Chris, what do you think?
Well said. That's basic. I couldn't agree more. Where we provide a lot of assistance to our members, as I shared earlier, I have a discovery meeting, and really that's the opportunity where I get to ask those questions and kind of find out where people are. What do you want to see happen? What do you currently have in place? And how, are those current strategies working for them, or meeting the objective at hand. So as I stated, the people we work with, the members we support, they're not expected to be financial experts, and we're not, estate attorneys, but we know enough to be of assistance to you to provide some direction in terms of pointing you where you need to go next.
That's good. So we can provide guidance on that, which is great. We don't have any further questions here. So let me go to some of the other questions that were posed beforehand. What amount do you need to have with Northwest in order to qualify for the private relationship management?
Yeah, so the criteria to participate in private banking is $250,000, and that can be in checking, savings, certificates, or IRAs, bank IRAs here with us. So I service members to obviously manage those relationships, but also to address their other financial areas as well. But that is the criteria. So if you meet that criteria, obviously I can work with you. If you have those assets at another institution, obviously we could work with you and see if it's a better fit for you here at Northwest. So that's our criteria, is that 250,000 target.
And I will talk to anyone with any amount of money or none.
Yes, she will, and she's awesome. All right, last question that I have. If I have both a traditional and Roth 401k, can I roll both of them over to a Roth?
And the answer to that is yes, but it's complicated. So the way it works is like this. So, a lot of companies are now doing these 401k retirement plans with a Roth provision attached to it. So now, once you separate from service, or say your age 59 and a half, you can access those funds. You want to move some of the money out. What happens at that time, or you even retire, you stop working? What happens? How do you move that money from point A to point B? First of all, it's very important that you move it the right way, because if you move it the wrong way, that is a taxable event.
Mhm.
Depending upon how much money we're talking about, that is a severe taxable event. Money that comes out of a 401k plan or a 401k Roth improperly, you are taxed at your ordinary income rate, whatever that may be. So think about it like this. Let's say I make $50,000 a year.
Mhm.
I separate from service, or I'm age 59 and a half. And what I have now in my 401k plan is I have $300,000 or I have $250,000. And I move that money, I move that 401k Roth into a traditional IRA. Well, first of all, you can't do that. Secondly, taxable event right then and there, taxable. You now owe taxes on $300,000. If you were not expecting to owe taxes on $300,000, that will be quite a shock. I'm just letting you know, it's not sexy. Okay, so what do? What you do is, here at the credit union, you would open up 2 IRAs. IRAs here are free. We do not charge a fee for them. So what you would do is you would open up a traditional IRA, and then you'd also open up a Roth IRA. What you would do is you would transfer over the regular 401k aspect of that 401k plan into the traditional IRA. And then you would transfer over the Roth 401k aspect of that fund into the Roth IRA. That way, that is a non-taxable event and no harm, no foul. Okay, so that is very important to do. Now, what do you want to do is, in case like, well, I'd sort of, sooner or later, I'd like to get all the money into the Roth. Well, what you can do is you can do something called a Roth conversion. And what that is means that you're taking some of that money, or all of it, depending on how much in taxes you want to pay in that year, taking some of that money and moving it from that traditional IRA through a withdrawal and then converting it into a Roth. That is a taxable event. So you have to know, how much do I want to pay for this? Also, you need to be ready to pay the taxes on it. And the money has to stay in the Roth IRA for 5 years. After 5 years and you hit age 59 and a half, that money is IRA. You can take it out whenever you want and do what you want with it.
Excellent. Now, meanwhile, here I got another question. Can I move or consolidate a beneficiary IRA?
You can consolidate them. You can move them. But when you do that movement, you must move that beneficiary IRA from one beneficiary IRA directly to another beneficiary IRA. And this is where actually a lot of bad things happen to good people. You're named the beneficiary on your father's 401k plan. Sorry for your loss. And also you get some money. What people find out is they ask for the funds to come to them. And what they find out is, oh, I can put this into an inherited IRA. If that money does not go directly from that 401k plan directly into that inherited IRA, it cannot be done. That is a taxable event. You're stuck with the taxes. There's no way around that. There is no way around that in the IRS code. So you can move it. Just remember that whenever you move that beneficiary IRA from place to place, you must have that beneficiary IRA already set up, and that check needs to be made payable in the name of that beneficiary IRA. Cannot tell you how important that is, because a lot of people have been burned by that one.
Yeah,
I'm sure. And then we had a question as to who to contact if they wanted to open up both traditional or Roth. And I said, you, right? That would be Joanna. Yes. And her email address is listed here. But again, once I send out the link for the recording, etc., I will include the presenter's contact information again, just so that you have it. And I think that was it as far as questions are concerned. So now it's time for the fun part, the raffle question. So
money.
I need to get one of those cowbells or something to make this a little bit more fun, or play some music or something. Get your chat box open, your typing fingers ready, your keyboards out, everything that you have to do. Here's the question. What is the new age for requirement minimum distributions? Go. All right, I think we have a winner. Carlisle, you are it. You are the grand winner. Yay, round of applause.
Yay.
Yay. And I have your email address from your registration, so I will contact you to find out where you would like me to send that. Unless anybody has any more questions, I think we are good to go. Make sure I didn't miss any. I think we're good. Thanks again so much, Joanna and Chris. Always appreciate you being with us and doing these presentations. We really appreciate it. Everyone have a great afternoon.
Thank you so much for your time.
Yes, thank you all.
Yes.
So much.
Bye.